Nvidia, the undisputed king of AI chips, just stumbled, watching its stock plunge. Was this merely a market blip, or did it expose a far more unsettling truth about the entire AI industry? This week delivered a bit of a shock to many in the tech world. We saw Nvidia, a company that has practically printed money riding the AI wave, take a significant hit. Its shares dropped over 7%, briefly entering what investors call correction territory. You might wonder, with all the buzz around artificial intelligence, how could this titan possibly falter? Well, the story is a bit more complex than just one bad day. It's like watching a high-performance car suddenly hit a pothole. You need to understand what caused the jolt. The first catalyst for Nvidia's dip wasn't even about Nvidia itself. The broader market experienced what we call a risk-off sentiment. Imagine a general feeling of unease spreading through the stock market, especially in tech. The Nasdaq Composite, a major indicator for technology stocks, fell more than 3%. When the tide goes out for the whole tech sector, even giants like Nvidia feel the pull. Other semiconductor players, like Broadcom and AMD, also saw their shares fall, some even more sharply than Nvidia's. This tells us investors simply pulled back from riskier assets, turning instead to more defensive industries like healthcare and financials. Macroeconomic headlines, like plummeting consumer confidence, just added to the jitters, creating a perfect storm for tech. But here's where the narrative gets really interesting and a little dramatic. A significant chunk of the pressure on AI infrastructure stocks came directly from OpenAI, the company that really kicked off this current AI explosion. Their CEO, Sam Altman, made some surprisingly defensive comments regarding the colossal financing needed for their aggressive spending plans. We are talking about commitments that reportedly stretch into the trillions of dollars. Picture the visionary behind the biggest AI breakthrough suddenly getting a bit squirmy when asked how they plan to fund a future that massive. Then, adding fuel to the fire, the Wall Street Journal reported OpenAI was seeking a government backstop for its data center investments. The company quickly walked back those comments, calling them poor wording, but the damage was done. Investors began viewing OpenAI less as an unstoppable catalyst and more as a potential risk. This definitely contributed to the growing bubble talk in the AI space. Yet, despite these headwinds, the actual underlying news about AI earnings was remarkably strong. Take AMD, Nvidia's main rival. They released an incredibly positive earnings forecast, projecting $9.6 billion in revenue for the next quarter, significantly exceeding Wall Street's expectations. Looking further out, AMD anticipates tens of billions in revenue from their data center business by 2027. If you believe the AI cycle is just getting started, AMD's numbers offer powerful reassurance. Furthermore, companies specializing in optics, the critical hardware that connects all those powerful AI chips in data centers, like Lumentum and Fabrinet, also forecast extremely strong sales. This signals a major acceleration in data center builds, which ultimately means more demand for those essential AI components. So, while Nvidia saw a significant dip, it wasn't necessarily a crack in their foundation or a sign that the AI boom is over. Instead, we witnessed a complex interplay of broader market caution and a wake-up call from OpenAI regarding the sheer scale of investment required for this future. It feels less like an Nvidia-specific problem and more like the AI industry taking a momentary breath, reminding us that even explosive growth can have its bumps. Are we watching a healthy market correction, a much-needed moment of reflection, or the first tremor of an AI bubble that still holds some surprises for us? We invite you to share your thoughts in the comments below, and please subscribe for more deep dives into the ever-evolving world of tech.